Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Thursday, August the 5th. The year's 2021. Let's talk trading. How to analyze a chart, part 8. Squigglies! How can we not talk about squigglies if we're talking about analyzing a chart, right? Anyway, this video is for educational purposes only. Your results may differ from mine. Okay, you guys know I tease the squiggly line users, traders a lot. But truth be told, when I first learned how to trade, um it was with ruler and value line charts out of the book that were updated once a week. So didn't have any squigglies. Then, coming to online trading, oh man. I used to I learned Bollinger Bands. I learned RSI. I learned, MACD, stochastics. I learned them all. And since then, I've pretty much thrown them all away. But it doesn't mean that you can't make money with squigglies. So here's some squigglies, or here's a squiggly. It's actually the 5-period moving average. Nothing special here. I've got the MA in color, moving average in color indicator that I modified. And so actually right here what we have is we have the 5-period MA, but we're using the EMA, exponential moving average, which I remember reading in a trading magazine years ago that they tested all the moving averages and this one was the best. So that's the one I used. And as you can see, we're right now on the H1 chart and we're looking at the squiggly, and according to the color, doesn't really have a direction at the moment because it's switching from up to down, back to up. So analyzing a chart with the squiggly. If the price is above the squiggly, then you most likely want to be long, unless it's too far above the squiggly, and then you might want to take your profit, or you might want to reverse and go back towards the mean, regression to the mean, because these are an average and mean are the same thing. So that's one thing. The other is, which direction is the squiggly headed? Is it up or is it down? So you can see here it was going down, the magenta line going down, change colors, and then finally it decided to go up. So maybe you entered the trade. Hopefully, if you did, you see what happened right there. And that's one of the reasons why you have to have a stop loss. And then it came back and continued up. And you see here it got far away and then it wound up coming back. And so I've got it in the dashboard. You can see what the price is here. And I put the big box there so you can see what the price is. And that's pretty much how you analyze a chart with a squiggly. Now, that's a squiggly on the chart. Also, those of you who knew me way back in the stock fetcher days, RSI 2 with LaRogia, he's the one that taught me how to understand divergence, even though it took me 6 months to finally figure it out because just the way he taught. But anyway, I can look at this chart here and I see here we've got a low, price here made an RSI, but then all of a sudden, let's see. No, that's not quite it. Let's see. Do I see any easy divergence on the screen? No, I don't really see anything screaming at me at the moment. So here with the RSI, when it peaks, and this one was pretty high at the time, Then you look for it to come back down. A lot of people use the 70 and 30 with RSI 2. Normally you look for 90 and 10 because you want it to peak, and then it drops down. And these dots, that's the TRO indicator 2, IND2. And basically, this is a 5-period moving average, once again, EMA. But the dots say, did the price close above it or below it? And, back in the stock trading days, in fact, there's you guys are still using it. And this is on a daily chart. They would just swear by it. Once you get that dot changes the color, you can just ride that dot. And we can switch time frames, come down to, let's say, 5-minute chart. And you can see it here, dot change colors. And even though price kind of went above the dot, if you can sit on your hands and let that candle close, you can sometimes be in profit. Of course, you have to trade what you see, and it doesn't work every time. I mean, here, if you waited and then you jumped in, okay, price gave you an opportunity to take some profit. If you didn't, market took it back. If you took this signal short here, and for a little while, price was below, it came back. It did make a new low. So by analyzing the chart, you'd say, well, wait a minute, it's below the dot, but price is going up. It didn't break out of the wick zone to the bottom side, and I know price doesn't like staying in the wick zone. Maybe I better get out of that trade. And then you can see here what happened on the reversal. And that's how you can analyze the chart using, the squiggly or the dots. And once again, looking here at the RSI 2, I do notice that looks like I see a divergence here. So we had a price closed at this level, and it made this low, but here we have price closing at a lower level, but it's making a higher RSI 2 value, and that's called divergence, because you can see right here we're at 8.5754, and here we're at 7. Where'd it go? I think I need to expand the chart a little bit so I can get that. That says 15. Something's not right. Oh, there we go. That says 7.6999. And this says 13. But this close was below this close. And here, once again, we have a lower close, but a higher RSI, which means positive divergence. So, and you see price went up a little bit. But once again, this is why you have to take your profits, because in this case, the MA is going down, and you see it closed below, and then it continued on its way down right here, but it made a lower close, higher RSI, and then it moved to the upside. And so here's just the opposite. You see, you've got a lower close here, high RSI, higher close, lower RSI. That's negative divergence. This is signaling that price is going to come back down, but the moving average is telling you price is coming back up. But then you can see that divergence now is starting to pay off. And so that's how you analyze a chart. So once again here, we've got a close, high RSI, higher close, a lower RSI, signaling price it's going to come down. So when you see the divergence, you don't just jump right in. Once again, you got to trade what you see. And so you see it happening on the chart, but you wait for something that tells you, yeah, I want to go short. And what that could be is, once again, you can look at the wicks and you say price went above it, but didn't close above it. It came down, and then all of a sudden, it's like the divergence takes over, and boom. Now, the other thing is, though, you might not want to trade against the dot, so then you have to wait. And that's one of the reasons why I left the Squigglies, because wind up getting in late, and sometimes it just didn't work. Especially if you're scalping or you're doing, day trading where you want to be in and out. And of course, you can always move down to the M1 time frame, and you get a signal would come in a little bit quicker, but from the RSI and from the Squigglies. But if you just use the horizontal lines, let's see, this would be the highest low right here. And you could see what happened to price by taking that trade. So that's why I don't use the Squigglies anymore, and I like to tease the guys because it's voodoo. In fact, when I started with all this and I was on TradeStation and I made the never lose again, the trend indicator, it was because I had taken a trade on I think it was if I remember correctly, it was a MACD trade, and I was looking at, I don't know, the M5 time frame, and it was going up, but the other time frames were all going down, and I said, okay, I'm not going to lose again. So that's when I made the radar screen, figured out how to do the multi-frequency radar screen and all of that. So I could look across and see all of the MAs, which direction they were heading all at once. And that's how I used the dashboard and the multimeters, the same thing. But then I just got away from all that, because it's like, wait a minute, price is the same on all time frames, but the values of these Squigglies change. And to me, that was like, wait a minute, this is like voodoo. Why would I use an indicator where I change time frame, it changes the value when the price is the same? Now think about that. You change time frame, the value of the indicator changes, but the price is the same. Does that make sense to you? Maybe it does. But for me, it didn't make sense. And so that's when I stopped that. But the thing is, if I had to use, this chart, and this was the only tool I had available, can I make money using this system? In other words, I have to follow a system. Yeah, I can. But it's because, one, I'll trade what I see. But even if you take that away, I can still make money. Why? Because of the risk management, something that, I talk about a lot, right? Risk management, because I'm not willing to lose any more on any one single trade than I'm willing to lose on a single trade. And that's the key. So, trading is a best guess proposition. It's, you could have the exact same setup 3 times in a row. You could win once, you could win twice, you could win all 3 times, or you could lose once, lose twice, lose all 3 times. So it gets into money management. So, like, how much do you take? And on the risk management, how much do you lose on those trades? Because it's not like a bet where you already know what the outcome is if you win, and you know the outcome if you lose. So, fellow traders, just remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.